Hi everyone, and welcome back to the channel. At this point, you have probably all heard about the run on cryptocurrency and the FTX bankruptcy. But what you may not know about is how the collapse of FTX will impact the housing market. As with any major financial scandal, there are always ripples throughout many of the markets. Today, we're going to dive into just a bit how badly real estate and housing will be impacted by this scandal and the drop in crypto values. First, for those that have been ignoring all this FTX bankruptcy news because you didn't think it had any effect on you, let's recap what happened. At the start of November 2022, the cryptocurrency exchange FTX collapsed over a period of roughly 10 days. It started with a report suggesting potential leverage and solvency concerns. What many didn't realize was that FTX used deposits from customers for investments and offered crazy returns for just depositing crypto with them. However, it came to light that due to these investments, the exchange faced a liquidity crisis where it didn't have enough cash on hand to pay back customers when they wanted to withdraw funds. FTX then tried to negotiate a bailout by rival Binance that quickly fell through. Meanwhile, customers began a classic run on the bank by all trying to withdraw their funds at the same time. Without the liquidity to pay their customers what was owed, FTX was faced with the only possibility left to it, which was bankruptcy. FTX assets have now been frozen and its CEO has resigned. The value of FTT coins, the token used by FTX, fell by nearly 80% in just 2 days' time. FTX bankruptcy filings indicated that FTX had assets in the range of 10 billion to 50 billion and liabilities in the range of 10 billion to 50 billion as well. However, earlier this year, FTX had been very busy investing in real estate. The Block reported that FTX spent $74 million on real estate in the Bahamas this year alone. There seemed to be a heavy focus, nearly $67 million spent on properties surrounding a luxury condo resort called the Albany Bahamas. This luxury development is owned primarily by U.S. investors like Tiger Woods and Justin Timberlake. It also appears that FTX preferred to purchase directly many of these properties instead of leasing or rentals, the result of which is that these properties may be subject to foreclosure as part of any bankruptcy deal. Now, with the collapse of the company, there are many questions about what will happen with all of these properties. The company no longer exists, so what purpose do these properties have as a result? If the assets end up being liquidated, which is the most likely outcome, how badly is that going to hurt the housing market in the Bahamas? And will the fallout from that also impact the U.S. investors, causing more pain in the U.S. housing market? Also, back in December 2021, it was announced that FTX would be partnering with In-House Commercial to offer buyers the ability to purchase commercial real estate properties using cryptocurrency. This was primarily in the Miami area commercial real estate market, where FTX had recently announced it'd be moving its headquarters to in the coming year. It's likely the company has already invested in several commercial real estate locations within Miami, which now may also be affected by this bankruptcy. It sits at a bad time for Miami, which is already seeing a decline in real estate due to higher borrowing costs and reluctance of new buyers to get into the market. The FTX headquarters in Chicago won't be spared either. Considering the company's propensity to purchase property outright instead of leasing, there may be an impact in Chicago area as well. With having liabilities to pay back upwards of $50 billion, it's almost certain that those offices will need to be sold off. All of this is occurring while the real estate market cools off and buyers are reluctant to jump in. These properties may drop significantly in value before they can be sold, and that in turn will bring down other real estate pricing in the area. Now, this is just what the company FTX directly controlled. This market just experienced a nearly 80% loss in value in just a few days. Other cryptocurrencies now are coming down in value as a result of this. And that is directly impacting the customers that had money stored in that exchange. Many millennials that came to financial age during the crypto revolution had placed much of their money into cryptocurrency, such as FTX. This significant loss in value is going to set many of those back in their savings and may even cause them to have to file for bankruptcy or may cause a new wave of home foreclosures and asset liquidation. forcing homeowners and investors to take some steep losses on their properties. It's still very early in the FTX collapse, and we have yet to see how wide and far this will reverberate. With the amount of money lost, though, and the complicated, confusing nature of crypto for judges and lawmakers to understand, the mess is just going to take a long time to untangle and understand. We will continue to monitor this news, so please hit the like, subscribe to the channel, and hit the notification bell so you can stay up to date when we release a new video. Thank you, and see you in the next one.